Let me also bring on board A. Bala Subramaniam, Chief Executive Officer with Birla Sun Life AMC. Bala, morning. Thank you for joining us. Bala, I know there is a compliance issue there. You would not like to comment on individual stocks, but the news is so big, I'm sure we cannot ignore it.
Yeah, I think, though I'd not like to make a comment on Hindustan Liver company per se, I think it's all the reflection of the India's story is largely driven by the consumption. And it also reflects, it actually is coming from a company which has been a successful company in Indian space and created a huge impact for multinational companies' presence in India in reaching out to the large pool of Indian the consumers. Clearly, the commitment for increasing the stake is an endorsement that the consumption-driven story for India it's not just going to continue, it's going to last forever. Otherwise, there is no company who would like to actually step up their commitment in terms of increasing the stake and pumping in close to about 20,000 crores of investments. That's, I think, it's the first and foremost assumption one can make. And second is, despite the tough environment in the last few years, which largely is driven by the investment demand not picking up, there has not been significant progress that we have seen actually in the investment side of the whole story of India. Clearly, the consumption continues to remain reasonably strong. Though there is, of course, it does go through some bit of ups and downs, but otherwise, given the sheer nature of the populations, and also given the beauty of the country, which is more self-sustainable, purely on the basis of our internal strength, and deliver kind of companies who have got large presence in the global market, but still coming and actually stepping up their focus on India in terms of increasing the stake, is an endorsement of the powerful consumption story, which has been the driving factor for India. And even going forward, how strong it is it's actually getting endorsed from the move which Lever has taken.
Just, speaking about the exposure and the overweight stance on the FMCG pack, what would be the strategy as far as FMCG companies are concerned right now? Are you, while you're saying that, yes, there's going to be that debate between growth and value, but given the potential that parent companies are seeing in their domestic businesses, is there, a reason to kind of scale up investments in companies where you already have exposure?
I think, as I mentioned earlier, one, of course, the valuation will be one of the driver for investing, as well as the strategy of the company in terms of building the business continuously year after year to help the company actually create more shareholders' value. That also will be forming part of the strategy. At the same time, every opportunity has to be looked at on a relative basis, which is the segment which could outperform. The outperform that has come from Lever in the last few days, one has to clearly keep in mind, one, the expectation of the companies in terms of delivering quarterly results is better than the street expectations. And second is the big move has also come on the back of the buyback announcement that has been announced by the company. It has got two impacts. One, of course, it reinforces the confidence and the convictions of the shareholders of being invested in the companies domestically. At the same time, the conviction in terms of the valuation which otherwise the companies can offer for a period of time to shareholders, and they're willing to offer a higher price. And third, of course, is the floating stock in the market also could have an impact once the 70% the buyback is completed. So all those things at the end of the day determines the price movements as well as on the PE multiple. If the floating stocks comes down, then to the extent the volatility of the stocks too come down significantly, and this will have its own plus points from the ownership point of view, from the larger participant coming from the investors. So and given this fact, the question is, how much is the exposure one need to have? That's actually the constant ongoing debate and discussions we always keep having, and accordingly own the stocks in the portfolio.
Okay. Bala, let's talk about banks. Now, So far, banking numbers also have been above estimates. Axis Bank came out with good set of numbers. HDFC Bank also has come out with predictable set of numbers. What do you make of banking as a space ahead of RBI credit policy?
Yeah. On the banking space, it's the large sectors in the index. So one need to play it very carefully in terms of what the kind of ownership one should have. And within the space, we as a fund house have been extremely bullish in terms of having a large ownership coming from the private sector's banks. Predominantly, the growth of the private sector banks is driven by the retail growth, and which has been paying off well for them, and is also reflecting on the price movements. And we have been having somewhat of successful track record in picking the right stocks in the private sector space. Having said that, the entire space I had mentioned some time back that divided into three parts, which is the private sector banks and large private sector banks, whole private sector banks and public sector banks. One has to, of course, have the right ownership in these stocks within the space. Having said that, some of the other factors also do influence, apart from the quality of the balance sheet, the policy which is of course expected tomorrow, and we as a fund house have been projecting that there is a high probability that inflation will surprise on the positive sides, settle somewhere around 5.5 to 6%, which will make relatively the job easy for the RBI governor in terms of looking at rate cut more favorably. And the recent movements in the commodity space globally, as well as the price fall in the gold, could have a favorable impact on the current account deficits, going down potentially by about 50 to 60 basis points. That also I think will augur quite well for the favorable rate cut environment as we move forward. And that also in our way will add to further flavor for the banking space, mainly on the back of the rally that could witness on the bond market, wherein we estimate the bond market yields could come down by anywhere around 50 to 60 basis points over a period of next 6 months. That also I think would going to help the banking as a space, mainly because of they are the single largest owner of government bonds. Any gain arising out of the bond portfolio would also help them in terms of having right adjustment against any potential loss arising out of NPAs. In general, we as a banking space, we have been bullish. We have been largely more ownership we have been having on private sector banks, and that's a mix I think we'll of course keep managing it dynamically to ensure that we have the right positions in the portfolio.
All right, Bala, we'll let you go at that. Thanks very much for joining us and giving us your perspective